Good morning, traders. It is Tuesday, the 7th of June, 2016. It's 8:02 a.m. Chicago time, 9:02 Eastern. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not much driving the market overnight. I think the biggest news that came out last night was that the AP reported that Clinton, based on some information that they had early. You remember today is the most important primary for the Democratic Party's nomination to the general election here in the United States. AP announced that Hillary Clinton has clinched the Democratic Party's nomination. Not too much of a reaction overnight. Australia's central bank has signaled there won't be a rate cut anytime soon. China's FX reserves fell again. The foreign exchange reserves fell by 27.9 billion in May to 3.19 trillion. In China, Eurozone GDP was revised up, and that's pretty much the lot of it. There's not much more that came across. We had final non-farm productivity at 7:30 about a half hour ago, negative 0.6 in line. Unit labor costs 4.5 higher than the 4.0 expected. That's fairly important. The cost of labor rising, that gives rise to the Fed making its move over time. So that's pretty much what we have. Let's take a look at what we've got as far as the technical side of things. Here's what yesterday's Trader Bite showed for the session. This is our primary hypothesis. We went over the balance that we've been in, the fact that the market has been pushing higher from lows pretty much every day the prior week. And so our expectation is a pullback towards the point of control. The point of control was at 2099 even, and then expected a bounce and a push towards that 211450 double measured move level that we have from a couple of swings. And that's basically what has worked out in yesterday's session. The secondary hypothesis, not that it's important, the secondary hypothesis is an open test higher than drop into the balance that was there. So it's a function of how much attraction does the balance have versus how much is consolidated into the most recent balance to push us up above, and we ended up continuing to move higher. I've been talking about the expectation that we would continue. We would take out the 2105 and a quarter all-time high, and we just did. So that's how things are shaping up. What I didn't go over yesterday is how we are trading on a weekly, monthly basis. And I like to jump back to a market profile chart for that. And notice the last 2 weeks, once we broke out of this massive consolidation that we've been in for the entire month of May, we broke higher, and we have just, again, we've left these gap zones beneath us open. These gap zones will likely make for an excellent trade at some point as we rotate, once we rotate down and start filling in. But overall, we've stayed in this balance, and we've finally pushed through. So the expectation is that, although in the past what we've done is we've pushed to new highs and immediately rotated down. You can see how this is a prolonged week here, the week of the end of April, and we start to draft back. And that's been the modus operandi for the new highs. But overall, this has achieved balance. You notice there's not much balance that was available there before those new highs were hit. Last time we were up here at 2105 and a quarter high. But we have this balance, so the expectation is not an immediate rotation down. The expectation is this is likely to push a little further until it runs out of the steam that it has built in the form of short sellers. Somebody had to take the opposite side here. Once we run out of steam and find the price that sellers are willing to participate in, then we'll start our rotation down. And the initial target is around the 2093 area. So that's how the weekly looks. Let's look at, just so we can keep in mind what the big picture is, this is how the monthly looks overall. Let's step back a little bit. We had a really awesome March range. We had a great January range. February was also pretty good. We had really decent ranges those 3 months. And we went into this consolidation kind of range, and May was pretty anemic in volume. Just pretty tight, but overall, look at what it did for May. Lower high, lower low. It ended the one-time framing up, and then it turned around and pushed right back through to the upside. So this these 2 months together, the May-April month, present an awful lot of support. And we've seen in those, for those of you who have the ES Flex levels on this charting software here, you see how clustered those levels are together. There's a lot going on beneath us, but there are also some important gaps that we've left behind that I believe will create some pretty good opportunities to trade. A quick look at the overnight. Quick look at the overnight here. I have changed the overnight chart a little bit. And what we're looking at here is the overnight session only. So I've removed the day session from the 24. This is normally a 24-hour chart. I've removed the day session, and I've added a volume indicator, and I put a profile on that volume indicator down here. So this is profiling. This is giving us a histogram and first standard and second standard deviation. Second standard deviation is this red line. The second standard deviation represents about 95.45% of the overall population. And this chart goes back 252 days or 1 year of trading. And what this is showing is in the overnight, the most common volume, the most common volume for the overnight session, which for me starts at 3:15 Central, 4:15 Eastern. In other words, from the time the pit closes till the time the pit reopens, that's part of Globex. And so the most common is 180, and we've been trading exactly 180 over the last few sessions. If you look earlier in the year, we have been trading much higher than the first standard deviation, what we would consider to be normal, and has pushed into the second standard deviation. And the reason I bring this up is I like to look at this every once in a while, and I do talk about the overnight volume overall because it helps gear our mind to what to expect for the session. If we get in the overnight session, if we get anemic volume or participation or in line, then expect a fairly, this is one of the things that support a choppy or a quiet hypothesis. If you get volume that is exceedingly high and is above what we would consider to be normal or approaching what we would consider to be the limits of normal, then that a lot of that volume continues into the next session, and then that's when you hear it in the initial hypothesis that we are likely to have wide rotation, intermediate time frame traders coming into the market, and so on and so forth. All of that volume that took place in the overnight session is likely to continue to manage risk into the open as they gain U.S. exposure. So this is just something that, in an answer to a question I've seen a couple times, well, how do I know? I don't know. I'm just looking at statistics, and what that histogram is showing me is the statistical outcome of of what we should expect. So let's switch back to what we normally look at on the overnight, which is the 15-minute, to see what the market is showing here. Let's resize these. So here's what we've done overnight. We've pushed through the high yesterday. Yesterday was a very, very interesting day. We ended up with a neutral day. We took out the high, the IB high, and the IB low, and then we ended up testing the other side. This sort of pattern on a neutral day is highly unusual. It would have been incredibly unusual if it had closed in the upper quartile of the day above the IB. It did not. It closed right against the point of control. It's fairly a neutral. It's a neutral normal, a normal neutral day, and then what it's done is it's carried that forward with the open of the European session, and now we're pulling back into the profile. The market has found its sellers overnight at 2116. My sense here, it changes a little bit what I expected overnight, but my sense here is that we're not likely to see this overnight high early in the session today. The market has clearly pushed to it and is coming back, is moving away from where it was trading, and is coming back into the prior day's profile. I hope I didn't lose you in all of that. There's a lot of detail there. You might want to rewatch this, but these are the pieces that put together the context for me to come up with what the plan is. And for those of you who've been following for a while, these hypotheses help us gain a strong hand into the trades that we take, no matter the time frame. Here's what we've done overall. We've pushed. You've seen this chart a billion times now. We've pushed through this high volume area, lots and lots and lots of noise here. And then, as we said, once we get above this 2081 area, once we get above the 2081, then we are looking for to test the next high volume node and over the hump into new highs, and that's exactly what we got. So just keep in mind the higher time frames as you're trading in the shorter time frames. So here we are again. We opened yesterday, tested higher, came back down to the almost to the point of control on the Yellen comments, and then the market ended up continuing its move. The Yellen comments unfolded in a three-wave move. You can see that very clearly. See that very clearly here in the short-term chart. She comes out. We have wave one down, wave two pullback, and wave three is the continuation. And then we got a corrective move back up. So overall, the market is dominated by buyers clearly, and has finished at 2108 quarter. So has moved. We've moved our point of control up, our value up. It's fairly bullish. So today, what are we looking at? As far as releases, there's not much left. We have consumer credit at 2 Central, 3 Eastern, but we have several ECB speakers coming out at 10 o'clock, and you need to pay attention to that. The reason you want to pay attention to that is because if you look at the Euro chart, massive pop in the Euro on Friday, and the market is basically sitting tight, and this move has happened on news. So we are concerned about the scene of the crime, the SOC, and the scene of the crime in the Euro is all the way down here in the 111.60 area. The market's kind of sitting sideways. So if you're in the Euro, there's a lot to worry about if you're long and it gets below this 113 handle. You'll start to see it zipping down this flagpole pretty quick to 111.60. But for those who are watching the Euro or trading the Euro futures, this is important to point out. What are we looking at for today? Sorry, let me clear my throat here. What are we looking at for today? Today, after new highs, we're actually I'm looking for a fairly choppy open, fairly quiet open actually. I'm looking for a balanced push an attempt to go lower. I'm looking for a base at 2105. This value area from yesterday is valid, and then I'm looking for it to continue higher into key um, our key target of 2114.50. I still think it'll have a hard time breaching that 2116. It's likely to make an attempt higher. It's more likely to look like um, a push back higher and then a fall. But given how we're trading, given the trend, the overall trend, I have to stick with that plan. The expectation is a choppy open, and attempt lower back to 2105, find a base, and then start to drift up to 2114. I'm not expecting a lot of range today. That would be hypo 1. Hypo 2 is almost exactly the opposite. Chop, test higher, find its sellers above 2112.50 or so, maybe push towards 2114, and then the expectation is it's likely to drop back in and draw in more buyers. Remember, the market moves up to bring in sellers. The market moves down to bring in buyers, and having broken out and pushed through, the expectation is it would likely advertise lower to bring more buyers to give more power to that push up. There's no question about it. We are in an uptrend. Clearly, we broke the all-time high yesterday, so there's no reason to fight this. Just let it do its thing. I know there are a lot of bears out there, and people think that the market's overpriced or whatever. But the fact is, it doesn't matter what you think. I did have a bit of trade wisdom advice that I wanted to give, but I'm gonna pass on that for now. It's been a lengthy video already. I'll let you go, but I want to remind you today I'm gonna be on Futures.io speaking in in the first of a series of webinars, 4 series webinar, and the link for it is in Twitter. And also in the description of this video, if you want to attend, I'm going to be talking about trading techniques, where they fit in your overall journey, and how trading techniques, how much you should focus on trading techniques versus the other parts of what it takes to be a successful trader. Good luck, and that's at 4:30 Eastern, 3:30 Central, after the market on Futures.io. Look for the link on Twitter or in the description of this video. Good luck today. Take care.